Well, it gives me great pleasure to welcome Puneet Chhatwal of Indian Hotels on this edition of India Reboot, the show on which we debate, deliberate, ideate, and understand that what can be done to bring India back on the growth map. While the second wave has been much more devastating in terms of the impact and the sheer volume has been so high, the recovery also this time has pleasantly surprised us. When we do a channel checks, the indication is that once the lockdown is getting lifted in parts, things are indeed normalizing. But for the hospitality sector, it's not one, it's two waves. And there, how have this survived? And how have big brands like Indian Hotels, which owns Taj, has managed to really weather the storm? Mr. Chatwal, good morning. Thank you for joining us. I haven't spoken with you in a while, so I really look forward to this engagement.
Thank you,
What is
Nikunj,
your
for
assessment of the second wave? Right. What is
yeah.
your assessment of the second wave? And in terms of the economic impact, how different it is from the first wave?
So, Nikunj, the second wave has been very, very bad for the lives of the people, the livelihoods, and also for the industry like hospitality, tourism, which was beginning to hope that things would recover, and then it got this very serious setback. Having said that, the one thing which human beings are very good at is building resilience. And I just checked before this program that on 29th June last year, we had a complete lockdown with 18,000 cases. Today, we have almost the average for the last week, approximately at 50, and there is far more activity. In the first wave, there was almost 90,000 positive cases, which went up to 400,000. And the bounce back period has been shorter. If we compare that to any other kind of downturn, the first time it hits you is very strong, the second time is semi-strong, and the third time, as unfortunate as it sounds, it becomes business as usual. As we have also seen in the aftermath of a lot of terror attacks, 9/11, Madrid bombings, London bombings, Nice, and all, and the bounce back period becomes shorter. So what we are noticing at this point of time is a definite increase in the number of room nights, a definite increase in ways to meet and go out for lunches or dinners, depending on which city you are in. And people are taking precautions, but the increase is exponential compared to a complete lockdown, which the industry witnessed in the Q1 of the previous year. So I think the bounce back is strong. That's the first message. The second is this is the first time there is a convergence in the needs and wants of the industry as well as its customers. So both are really wanting to come back as strongly as possible. And thirdly, I think there is a lot of empathy which has got built in around the sector, and also a lot of understanding for the associates who have been working as frontline workers and doing their best in providing service to the nation, independent of which brand they work for. So I think all these three factors coming together are creating a nice platform for the industry to recover. Of course, none of us knows the impact the third wave, if it comes, will have or not. But definitely we are far more prepared on all fronts to deal with it should that happen.
How far are you away from a normal occupancy level which was in the pre-COVID era?
Well, last year, the Q1 figures reported by us and other companies who report their numbers, we had fallen to either zero revenues in certain parts of April, and we started coming back in May, and the quarter ended at like 15% of the previous year. For some at 12 and for some at 16, but the range was between 12 and 16%. And I believe the revenue, we can easily look at a 250% increase, which means it could be anywhere between 35 to 40% of the pre-COVID level in Q1, which was again very badly impacted by the second wave in April till the 20th of May or 25th of May, I would say.
Without getting into specifics, we all know that there is a big hotel chain based out of Delhi which has filed for bankruptcy. Do you see more of such big hotel and individual properties or companies which are managing these individual large and very marquee properties could be in trouble?
Nikunj, it's not just the pandemic. Pandemic only accelerates change, consolidations, M&A activity, or this kind of acts that happen, which are beyond anybody's reasonable control. Important is companies which have been around, brands which have been around for several decades. We have been around for 120 years. There must be certain things that they do, how they are capitalized, their ability to raise capital, the awareness of their brands, the trust in the brand. Taj stands for trust, awareness, and joy. And one of the first core value is trust. So I think some of these things are very critical to weather the storm, no matter what kind of storm it is. And it helps also management to navigate by putting right strategies in place. But definitely the impact on the entire hospitality industry has been very, very strong. And more important than the properties coming up for sale or bankruptcies, more important is the lives and livelihoods. This industry, I have said it repeatedly on your channel and elsewhere also, employs the tourism, airline, hospitality industry is more than double-digit contribution to GDP as well as to the employment on an official organized sector basis. If you add the unorganized sector to it, this is a very important catalyst for the GDP growth going forward, not just in India, but across the globe. And I think that factor is the worst one. People getting financially distressed, it cannot only be attributed to pandemic. These things happen, and a lot of success stories also happen. So I think there will be consolidation, there will be M&A, but it has also been happening without the pandemic. Only thing is it will accelerate the change.
Okay, let me just pick up notes from your AGM. And Chandra clearly has highlighted that expansion is not going to stall. Expansion is only going to accelerate, whether it is Ginger or whether it is the number of hotels which Indian hotels right now is managing. While, when the times are bad, it is good to expand. But is it a good idea to expand when things are still so fluid?
Very good question, Nikunj, but that takes us back to our business model. We are not using capital to expand. This is our asset-light model, which we have executed very successfully over the last 3 years. As an example, we have added 70 new signed contracts for hotels to our business. We've added 40 homestays to our business. So these are being done without using capital, with the exception of a couple of properties, which we either own the land, like our flagship Ginger, which we are building at Santa Cruz, where we have had the land for 28 years. So we did not buy the land. It's only the incremental employment of capital. And we will also definitely look at exit strategies. So the chairman of our board, Chandra, has been absolutely right that expansion should not stop because hotels are an asset class which belong to more or less like a real estate sector. And these assets are not built for a couple of years. And hotel investments, in my opinion, are the most important anti-cyclical investment, so that you build when the market is down and not at the top of the market or at the top of the cycle. So I definitely believe that expansion is good. Expansion on Ginger is very important because it's a very high margin business. It has a great potential on the Indian subcontinent because of the heterogeneous nature of India. And we have been focusing very strong in repositioning this brand for the last few years. And we do see a lot of success. I mean, as an example, Ginger had the highest signing among any brands on the Indian subcontinent. Ginger actually achieved more than 60% of the revenue of pre-COVID level. So definitely, this is a kind of a science. How you expand with a model based on management contracts or investments, with which brands you expand when you accelerate, and when you kind of put things on hold. In homestay business, I think people realize, for example, during this pandemic, it's nice to have a second or a third possible home if you can afford it, where you can get to. And here we are with our AMA concept to help such owners to manage this asset for them. So I think it's a very important question. So development for me is not it's an art and a science, and it's a very important science because a lot of parameters have to come together to make it positive EBITDA level growth or positive EBITDA margin growth.
Your stock is almost at a record high, and I'll tell you what markets are assuming. Markets are assuming that Indian hotels is in a sweet spot, and that's largely because traveling for holidays abroad for next 12-18 months would be tough. It is not impossible, it will be tough, and you will be a disproportionate beneficiary, at least in your luxury hotels and also in your holiday hotels. Is the assumption right?
I think you're asking the wrong person the question. That's the markets that they're assuming. I can only say we are well positioned with our comprehensive brand management and the reimagined brandscape since the last 4 years to take advantage of both international and domestic travel. On the domestic front, we have the largest portfolio of resorts. So if leisure and domestic is again going to lead the bounce back in demand, then of course, with almost 18 outlets in Goa itself, with hotels in Andaman, with properties, resorts in Kerala, in Rajasthan, the palaces, and in the north, in the hills in Rishikesh, which is, a runaway success since it has opened, as well as Simla. I think we are very well positioned, and our newly launched property in Darjeeling, also the Chia Kutir. So we are very well positioned with both the business hotels, which everyone knows, the Taj in Mumbai to Land's End to Taj Palace or Mansingh, or Taj Bengal, or in the south. I mean, I don't want to keep talking all about our properties, but we are very, very well positioned with that. We are in almost 100 locations in India, which helps us to hedge against different states, coming with different rules on regulations and opening and curfews. And so it helps us to hedge because of so many locations that we have. And our portfolio today with 160 hotels in operation and another almost 60 in pipeline, we will be opening several interesting and important assets. And on the international front, when I talk to our team, they're seeing a strong comeback in San Francisco. They're witnessing a strong comeback in New York. And I think as things begin to open up with London, especially for us, will be good. Dubai has been very resilient in the last 8-9 months, has done very well. And all of us know that Maldives has been like, to use your terminology, Nikunj, it has been the sweet spot of the who's who, including the IPL team. A lot of them went via Maldives and stayed at the Taj Exotica. So yes, a well-hedged, a diversified portfolio with a choice of different kind of offerings to our different brands enables us to be in a position to take advantage of the demand when it comes back, whether it is led by domestic or by international travel.
Your pandemic challenging time also has perhaps been the innovating time. Amma trails and cumin. Cumin is something which, in a sense, I never imagined that Taj would be offering that kind of a service. How large is cumin as a service for Taj now, or Indian hotels now?
Well, there are a few things. Let me, I think, underline what you said. I think one of the things, positive news that came out a few days ago for the Indian hospitality industry. For India, for the brand India, Taj was rated as the strongest hotel brand in the world. So this has happened for the first time, and I think every Indian can be proud of that fact. The second thing it comes is to uh, new business opportunities like Human. Human, we are very proud because we created the brand, we registered the brand, and we created an app with the help of Tata Digital. And we went to market in a record period of 6 weeks when the lockdown was at its highest point. Today, we are present in 16 cities. We just finished serving 1 million meals through Human and 1 million meals more through the Meals to Smile, also through Human, with the Energize menu, which helps you to boost immunity for our frontline workers. So I think with 2 million meals served within the first 12 months of launching a brand has been a significant growth for us. And the 1 year was completed 4 days ago when we launched our first Human food truck. And a few months ago, we had also opened the Human Gourmet Shop, the first one, and many will follow. I think that's the normal journey the brand will take and evolve. And also for all the right things, that it is very sustainable packing, it's environmental friendly. It's not just the food from our 65 plus restaurants in the 16 cities, but it also addresses the needs of comfort food. It's hygienic and there's, as they say, every crisis brings an opportunity. And I would have also not imagined 3.5, 4 years ago that we might go into food delivery business, which is a very large market. But again, through our network, we were very well positioned. Our kitchens were empty, our chefs were there, our people were there. So I think we made the right move with it, and we are very proud of the success of Human. And Human virtual celebrations have become like the hallmark of this brand. And although we are a new kid on the block with home delivery, I think a lot of other competitors are now trying to copy and compete with us on this platform. And that's okay, because as long as we are leading, it's fine. Others can follow.
But can Cumin really move the aggregate picture for Taj? I mean, it's a great innovation, but for a company of your size, if I combine the international operations and the local operations and where you're expanding, will Cumin be a needle moving initiative?
Absolutely, Nikunj. We need another year of this sustainable success, because it's not just the contribution as a percentage to the top line, as it's a business model based on incremental cost and incremental revenue. It's a very high margin business for us. So the margins we talk here in Human are north of 50%. And a traditional hotel business model is looking at an EBITDA margin of 15% if you own it, and 50% if you're actually in a franchise business, which we are not. That's not our core business model. And in a management contract, you could get those numbers because you don't own the P&L. So Cumin, we own the P&L in all the properties, and we are still able to drive those kind of high margins. And the same is the story with Ama. Same is the story with reimagined brandscape that we have. Unleashing the potential of each of these brands as a contributor or a significant contributor to EBITDA. And it's not a model based on you must have any new thing coming in at least 10% or 20% of the top line. We are fine if it has 5 to 10% of the top line, but starts contributing 15 to 20% of the EBITDA amount that is produced.
What is the future of business hotels? Business hotels largely were, that is one of the mainstays and higher margin business for any hotel chain. And I'm not talking about the pandemic right now. Work at home and hybrid model is a reality. Tata Sons chairman N. Chandra also alluded to this new model of hybrid. What happens to the business hotels if hybrid models are adopted? Travel will certainly be less.
but longer. So I think there are some articles which have come out this morning itself, which are, actually a proof that when travel comes back, it will be longer. And what we are seeing is two things, Nikunj. One is this digital and doing business online is fine because you are actually digging into the relationship capital you built over the last 3, 5, 7, 10 years. But for businesses to succeed over mid to long term, you also need to build that relationship capital for future. And that's why there will be movement. Having said what I just said now, there is another important thing that has emerged. Actually, two of them. One, the QTA travel, a quick turnaround travel going from, let's say, India to California and come back in 3 days, that's a trend that will take much longer to come back if it ever came back. What will definitely happen is instead of going for 3 days, you might end up going for 3 weeks and visit all your customers and all your business partners and come back. That's one of the trends that I see coming in future. The second is this whole notion of what we call leisure, combining business and leisure, or bizcation, or whatever terminology anyone might use. This will become very popular that people are actually in a leisure destination and doing their digital meetings out of there. Now the question is, are you counting them as leisure tourists because they've taken the family with them, or you're counting them as business, or you're counting them as a combination of both? So if we count them as a combination of both, this segment is emerging stronger than ever before. And I think that trend is also here to stay. So I think on one hand, we lose a bit on short term, short haul, quick turnaround business travel. At the same time, we are going to gain more on business travel combined with leisure.
So, Mr. Chhatwal, closing comments, and let's work with an assumption that there is no large third wave and things start improving. We are in June end 2021. Hypothetically, if we are engaging on the same forum exactly a year from here, which is June end 2022, where do you see Indian hotels moving, both in terms of recovery, in terms of cash flows, and now that a lot of your variable cost and fixed cost you've rationalized, how does that change your operating margins and the cash flow picture?
Let me, try to answer that first on a lighter note and then on a serious one. Firstly, there is a German saying, I'll translate it into English, your words in God's ears, so that there is no third wave and we are all, kind of shielded from it and everything starts going back to normal. I think we all in the sector wish for that and I hope that happens. The second very important thing which you said is the fixed and variable cost structure. For an industry as old as ours, the industry has had an opportunity to press the reset button on costs and has evaluated all possible costs, and almost everyone has done very well in controlling the costs. We, as an example, on just our corporate overhead went down by almost 40% without laying off even one person in our head office. So I think on the cost side, the industry has had a great opportunity. So when the bounce back comes, and that's a statement that I consistently make, even if we get to 85 to 87% of the revenue of pre-COVID level in June 2021, we should get the same level of EBITDA because of the reset on the cost side. Definitely in the short term, as and when demand comes back, it will not follow the usual pattern of Q3 being strong and Q4 being very strong, or Q2 being, not so strong. I think what will happen is because of some people call it revenge travel, some call it pent-up demand, we will see a disruptive demand pattern emerging, which should help the industry to bounce back in a manner that is not in sync with all the graphs that we have seen pre-COVID for the last 3, 4 decades on what happens on a quarter by quarter basis. So yes, your words in God's ears. and hopefully June 2022 we are all happy and have forgotten the first and the second wave also, and the third wave never came.
Well, Mr. Chatwal, if I have to translate that into Hindi, I would say आपके मुंह में घी शक्कर. So really appreciate your time, Mr. Chatwal. Thank you very much, and certainly hope to see much more of you going forward.
Thank you. Thank you for having me as always. Thank you.